On January 1st, 2026, the tax break that made forgiven student loan debt-free money quietly expired, and the IRS did not send anyone a warning letter about it. For 4 years, under a rule from the American Rescue Plan Act, if your student loans got wiped out through an income-driven repayment plan, that canceled balance did not count as income. You owed nothing extra come tax season. That protection had a hard expiration date of December 31st, 2025, and it is gone now. Here is what that actually means in dollars. Say you have been on an income-driven repayment plan for 20 years, making payments based on your income the entire time, and in March 2026, your remaining balance of $38,000 finally gets forgiven. Under the old rule, that $38,000 vanished tax-free. Under the current rule, the IRS treats that $38,000 as if your employer handed it to you in cash. It gets added straight to your taxable income for the year, on top of your regular paycheck. For someone in the 22% bracket, that is roughly $8,000 owed to the IRS, due the following April, for money you never actually held in your hand. We post a real hidden money rule like this every single day, so if you do not want to find out about the next one after it already cost you, subscribe now while it is on your screen. It gets worse before it gets better. Even during the 4 years the federal government waived this tax, a handful of states never went along with it. Mississippi, Indiana, and North Carolina taxed forgiven student loan balances as state income the entire time the federal exemption was active. If you live in one of those states, you were already getting a smaller version of this bill years before the federal rule expired, and most borrowers who lived through forgiveness in those states found out only when the state tax notice arrived. Drop a comment below telling us what state you live in, because the size of this tax hit depends entirely on where your mailing address is registered with your loan servicer. The form that decides how bad this gets is the 1099-C, cancellation of debt, and your loan servicer is required to send you one the same year your balance gets forgiven. If you are on track for forgiveness in 2026, 2027, or later, that form is coming, and there is no opt-out. Some borrowers are already talking to tax preparers now to set aside money in advance, because owing $8,000 or $10,000 in April with no warning is exactly the kind of bill that forces people into a payment plan with the IRS itself. Hit the bell so tomorrow's rule lands in your feed before it costs you too.